Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I'm your host, Ashutosh Garg, and today I'm delighted to welcome a well-known and respected angel investor from Mumbai, India, Mr. Sushanto Mitra. Sushanto, welcome to the show.
Thank you for having me.
Thank you. Sushanto is the founder and chief executive officer of Lead Invest, which was earlier called Lead Angels. He's also the co-author of a book titled Funding My Startup and Other Nightmares. So, Sushanto, before we start talking about lead angels and investing, you've had a remarkable career spanning over 3 decades. What was the inspiration to start your journey into entrepreneurship and investing?
Okay. So I was, one of the first. So that's something which recurs throughout my career. I was one of the first analysts of the IT sector
Mhm.
way back in 1994.
Mm.
And I saw there was an opportunity of, I spent 6 years as an analyst. And I
Mm.
realized that, technology is going to play a major role in
Yeah.
the uh, global economy and Indian economy. Uh, 94 was the time when Infosys and uh, Wipro and all these companies were going public.
Yeah.
Uh, so I thought that let's create, and there'll always be a communication gap between technology and capital. So I
Mm.
set up a consulting company,
Mm.
helping technology companies to raise capital, M&A, and I continued that till 2007. That was my first brush as an entrepreneur.
Mhm.
Then actually there was a little break, a 5-year break, where I joined IIT Bombay as their first CEO of their incubator called SAM,
Mhm.
Society for Innovation and Entrepreneurship. One of the oldest and perhaps the most successful academic incubators as yet.
Mm.
Uh, and then, of course, the entrepreneurial bug bit me again. And along with a professor and a student of IIT Bombay, I set up. The idea was that if, uh, IIT is, as you know, is producing one of the largest number of entrepreneurs, it is
Mm.
also the largest number, and potentially uh, the alumni of IIT is also equally adept in selecting those startups. So why
Mm.
not create an angel network
Mm.
for IITians?
I
And that's
see.
how a professor, uh, Amarnath, who's a well-known professor in robotics, and a student, we set up Lead Angel.
I see.
So the idea was to create, uh, and of course, to go back to colleges once again.
Mm.
And that's how I started.
Mm. And any interesting milestones in this amazing journey?
So yeah, the first milestone was that we realized very soon that IITians maybe a few IITians may be very successful entrepreneurs and maybe entrepreneurs, but majority of IITians are not very friendly to risk.
Mm.
So very quickly we realized that it may not be a great idea to limit our angels to just IIT
Mm.
and bring in. And of course, equally important how startups need not all be from IIT.
Yeah.
So you learn this pretty fast. I think the first milestone was when we started so we were first limited to Bombay, and the first
Mm.
milestone within a year, we set up in Delhi and then Hyderabad, Bangalore. This was the pre-COVID world, so you had
Mm.
to be physically
Yeah.
present all these places. But one of the key thing about Lead Angels and how it's different from other and now Lead Invest is that we were uh, like a privately set up. We are a private limited company which set up the Angel Network. There have been many followers thereafter, but we were the first. We were also the first to convert our Angel Network into an SEBI-registered angel fund.
Mm.
And a few new things are on the anvil as well. So I think in 2021, we converted ourselves into an angel fund. And in this current year, in 2025, we have started working in early stage, but also in late stage startups, because as far as the investor is concerned,
Mm.
private equity is something which is limited to the UHNIs and uh, um, big institutions. We want to get private equity, whether at early stage or at late, to the average corporate executive.
Mm.
And in fact, I was just telling you about Dhruv.
Mm.
Even our angel fund is
Mm.
Dhruv, jokingly called it, and no politics here, Aam Aadmi Angel Network. So
Mm.
it really means we try to make it available and accessible by
Mm.
corporate executives and uh, small and medium business owners, so that they can also do what the so-called rich are doing.
Mm. Mm. Fascinating. And what would you say differentiates Lead Invest from so many other angel networks in this country?
So of course, we've been, as I told you, we've been had a few firsts
Yeah.
and what I think there are two things which perhaps differentiate us. One, that we have tried to put the art behind investing
Mm-hmm.
outside and put more and more science in it. So
Mm-hmm.
not that I'm an engineer, but having been around engineers,
Sure.
saying that investing should be, we try to remove the emotional element and the gut feel, try
Mm.
to put a process behind it. So we have a fairly rigorous process of evaluating startups.
Mm.
In fact, even in the book, which I wrote along with Professor Dhruv, we have created a framework called the Persistent Framework, which is, of course, useful for both startups and investors
Mm.
to evaluate or analyze a business. Something akin to, a more detailed version of a SWOT analysis.
Mm.
Uh, and the other differentiator, and I think that is going to be very critical
Mm.
going forward, is that uh, we have built, the founders, you can say professor and the student. So there was a lot of passion in building this, and we set it up initially as a not-for-profit.
Mm.
The idea is more to popularize early stage investing, and therefore, uh, amongst the general public, that is the mission of the company. So we've been very, very clear about making sure that we are always above board. We always make our operations
Very interesting.
transparent, because we think that that is because one wrong step here uh, will make people have less faith in the startup ecosystem.
Very
And
interesting.
unfortunately, you would have seen some of the dirt coming up on the surface in the
Yeah.
recent months and years. And we've steadfastly tried to keep ourselves uh, clean and therefore have all our processes of selecting a company. We involve our investors themselves in the
Mm-hmm.
process, so that uh, uh, we do not, or any of our team members, or
Mm.
anyway have a conflict of interest. I think it's often, even in listed markets, conflict of interest is rarely something that
Sure.
Indians worry about, if I may use the word.
Mm.
And but I think we take conflict of interest very, very seriously.
Very interesting.
And I think that uh, because that's what we want to build trust with, corporate executives and middle class India, so
Mm.
that they don't think that this is another Ponzi scheme that is going
Yeah.
on,
Yeah.
but something that they can.
Sure. And Sushanto, how do you ensure alignment between startups and investors beyond just capital? Because when I was reading, you also work on mentoring and you support your startup with the strategic thinking.
Yeah. So I think the two parts, my experience as CEO of IIT Bombay, and these were very, very early.
Hmm.
And we realized whether there were professors who started the company or
Hmm.
young alumni from IIT Bombay. Uh, we as Indians have very little exposure to business
Hmm.
as students or in our academic lives, unlike the West. And therefore, a lot of things which come obviously to Westerners of how to market. And we also are blessed with a very complicated legal and compliance system. So those are the things which our uh, entrepreneurs are unaware of
Mhm.
or not exposed to.
Right.
And that is the first thing. And the other is that the entrepreneur's life is extremely lonely and full of failures. And if nothing else, they need a shoulder to cry on.
Right.
And we've seen, uh, entrepreneurs go through mental challenges and so on. So we feel that there has to be somebody there to support him. It may not be that, I'm not just talking about domain and legal and
Sure.
accounting and all that.
Yeah,
That's one part, of course.
I understand.
The other is the psychological being there for the entrepreneur.
Yeah, I understand.
And which makes, if nothing else, it makes the entrepreneur survive another, few years. And often that is the difference between failure and success.
Yeah. But based on so many discussions you must have had, so many investments you must have made, what, in your view, are some of the common misconceptions first-time founders have about raising capital?
I think one thing is that everybody thinks raising money is equal to success, right?
Right.
So, and the valuation is a metric to tell you how smart you
Correct.
are. And
Correct.
uh, having seen this over the last 25 years,
Hmm.
startups of various kinds, uh, valuation is uh, see, firstly, raising capital is important. But it's not equal to success.
Hmm.
Most startups need capital to start off, and it is an essential thing. If you can't raise money,
Yeah.
maybe your startup will not go.
Hmm.
That's one part. The second part is that beyond a point, getting money faster is more important than the valuation, because
Hmm.
we are living in an extremely uh, disruptive world. And as I say, this is getting more and more disruptive. I mean, we just
Correct.
saw what happened in Russia day before,
Hmm.
how a small country like Ukraine has taken out one third of their aircraft.
Hmm.
Is how disruptive this industry. So speed is more important at times for an entrepreneur.
Yeah.
So don't negotiate too hard
Hmm.
for the valuation.
Hmm.
And I've also noticed that if uh, in the first round you have not been able to get the best valuation,
Mhm.
investors will always be willing to let you claw back equity over a period of time.
Right.
Because if at that stage the alignment between the investors and you are strong,
Hmm.
saying this guy is doing well,
Hmm.
why not give him a little more equity? And now it is, regulatory framework is in place.
Right.
Founders can claw back their equity,
Hmm.
uh, and existing investors will be happy to do that, so that you have sufficient stake,
Hmm.
when the company is going public. So that ownership does not become an issue.
Hmm.
And as like the stock markets, valuation is a voting game, right? And over a period of time, it becomes a weighing game once you
Correct.
hit the
Correct.
public market. So that's what we have to realize. And of course, it's not easy either for the investor or the entrepreneurs. I'm not saying even for us it's easy
Absolutely.
of saying this, but
Correct.
over a period of time, the valuation does reach the right level. That's what we believe.
Very interesting. And what advice would you give to investors looking to make their first angel investment?
Right. I think this is something which again, this is your hard-earned money, and angel investing is risky. You don't get emotional or passionate about
Hmm.
investing, and especially angel investing. That's
Hmm.
one point. And we think that not more than 5% of your investable surplus should go into angel.
Hmm.
If you have the time, then perhaps you can join an angel network.
Hmm.
And if you think that you're interested but not have the time, then maybe you could look at our new product, which is called Lead Invest Next Gen, where we invest the money, help you to invest the money in a diversified portfolio. So diversification is equally important.
Hmm.
Listed market as it is in, perhaps more so in startups, because the
Hmm.
failure rate is high. Right?
Hmm.
And therefore, a lot of people make one investment or two investments and then stop,
Hmm.
uh, which is again wrong.
Yeah.
You should have at least 10, 12 companies in your portfolio.
Hmm.
Because, let's be fair, majority of them will not give you any return.
Hmm.
And that is something that you have to realize. So if you invest only three and all of the three turn out to be duds,
Hmm.
doesn't mean that angel investing is bad, that your portfolio is not diversified.
Hmm. Wow. That is great advice. Thank you. And from the startup or the founder's perspective, what are some of the critical gaps that a startup founder faces when he or she wants to raise some money?
Yeah. So I think at the first stage itself, as I said, the exposure to business and sales and marketing, even India's education structure and the way our society
Hmm.
is low. Nobody does. It's changing, but nobody sells lemonades during their summer holidays in India, for example, like what we hear of in the
Hmm.
West. So exposure to business, very poor. So that is one, lack of
Yeah.
exposure to business.
Yeah.
And our complex regulatory environment, it's very, very complex.
Hmm.
And founders, you know, as people are very overconfident. If you're not overconfident, you can't be a startup founder,
Correct.
because the dice is completely loaded against you.
Hmm.
So if you're that, but if you don't listen to or don't seek advice from your family, friends, associates, you may do many wrong things. And today, uh, you know, compliance is something that you are not spared, and the compliance is just as difficult for a
Hmm.
Reliance and a Tata company as it is for a startup.
Absolutely.
So don't. And the other thing, challenge I think, is the new Gen Z. They are used to deciding whatever happens in their families and
Hmm.
once they completely uh, against what happened from their parents and so on and so forth. So often they don't take advice, of course, in their personal lives, but not even in business.
Hmm.
So they don't listen to advice. And that, I think, is a challenge for founders.
Fascinating.
And if
And
they
and what
did,
kind of qualities do you look for in a founder before you decide to invest and or mentor a
yeah,
founder?
yeah. So I think, again, coming from that, we look at his ability to listen, or her ability to listen to other people.
Right.
Because yes, it is overconfident, need to be overconfident, needs to be deaf to criticism, yes,
Hmm.
but at the same time it's a nuanced thing, that how much of overconfidence and being
Hmm.
deaf to criticism, and
Hmm.
yet listen to people. So that's a very important mix, because
Correct.
every startup, most startups, I'm not saying every, but most startups need to pivot during their journey. And if you're not willing to take cues from the environment or from the advice that you get, it's going to result in failure. So I think we look at coachability as a very critical part,
Yeah.
not only from a mentoring perspective,
Hmm.
and equally important is persistence. Because if founder's life, as I said again, is very lonely and sad, and if they are not persistent and give up too early, then you could have a problem. So persistence,
Yeah.
and I think in the Indian environment, integrity is also very important. As I was talking about how important
Yeah.
building trust is, and given the social structures that we have in India, being weak, uh, uh, integrity is a very critical part. Not only, of course, in India, but more so perhaps in India than in other parts.
Sure.
We
I
need
agree.
to make sure that the guy is
Well said. Sushant, I have time for two more questions. My next question is, given the challenges most startup founders face, not from the point of, you know, knowing their technology or their product, but from a governance perspective, what should startup founders look for before they approach an advisory board or leverage their advisory board for growth?
So my suggestion would be that they should start taking advice very early in their journey, and usually advice is very nearby. Uh, Today most of their friends are working in a similar company, or their parents or parents' friends. Uh, uh, so that advice is always nearby. We often don't see it. Just like when you in an aeroplane going in, the nearest door might be just behind you, but you
Correct.
don't. You always rush towards. I hope it doesn't arise, but just in case. So sometimes, so that's the first stage
Yeah.
of taking advice. And I think that a founder would do well if he or she sets up an informal network of who they can call to. The tax issue, somebody I can call. The
Yeah.
marketing issue, somebody I can call. Moving forward, of course, if you want to create an advisory board, uh, it should have people who've been, who are either domain experts or people who also had a journey as an entrepreneur. Because an entrepreneur's journey is unique. And somebody who's not been through that drill will find it difficult to empathize with what
Correct.
you as a founder may be going.
Yeah. Yeah. Amazing. And my last question for you, Sujanto, given the amount of experience you have and the amazing investments you are making, what are some success stories from lead invest or lead angels that you are specially proud of?
Yeah, see, so most startups, I'll give you one example, counter example, and I'm proud of the company, but not as proud as the others. This is a company called Super Daily, which we invested in. It was providing breakfast, things like milk, bread, to people in Bombay, to young IIT grads. And it was a unique, it disrupted the market here in Bombay. And then, of course, very soon it got acquired in 8-9 months by Swiggy. And now this is what is Instamart. So I'm very proud of it. But I'm prouder still of companies which went through challenging times and pivoted, uh, and are now very successful companies. So one of the companies is in Gurgaon called Planet Spark. And we invested in the company, and this company was providing, hobby classes and English learning classes for kids in NCR. And we had just invested in 2 months' time. COVID 2020 happened. So the whole thing of having physical classes stopped. And it was more or less the end of the road for the founder. But they quickly pivoted and to online education. And today is, after multiple rounds of funding and revenue going, because the revenue just went, had a logarithmic growth during
Yeah.
the COVID period, and they continued it, and a profitable company. And I'm very proud of the fact that those founders were able to pivot at a
Fascinating.
time where everybody was depressed, right?
Yeah.
COVID was a very depressive time.
Absolutely.
The other company is another company from a tier 2 city. We didn't have any IIT or IIM sort of founders. They were trying to solve the problem that Kirana stores face from the modern retail chains. And they built their model in Indore. It was very successful. And they raised capital and they decided to move to Bombay. Unfortunately, or we can go into the details, but it didn't work out in Bombay at all. It didn't. This model didn't work because people still wanted to buy from the malls and the big bazaars of STRs, now Geo, the stuff. But they did not lose heart. They realized that it is a tier 2 sort of success story, and once they did that, they set up in other cities like Baroda and Bhopal and Ahmedabad and a bunch of other places, and extremely successful. So one success followed by a failure doesn't mean that you persist with that failure. So those are the things which make the founder's life, of course, exciting, but for investors to watch this happen is also really fascinating and
Amazing. And on that note, and your amazing examples of some entrepreneurs who've pivoted and made continue to be so successful. Thank you, Sushanto, for speaking to me about your own amazing journey. I think we covered some very fascinating points with you on investing, on lead invest, on lead angels, and of course, the perspective from an investor and the perspective from a founder. Thank you for speaking to me, and good luck to you.
thank you so much for having me, and look forward to interacting with you in person sooner.
Thank you. Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.